it's Omar. It's March 19th, 7:01 p.m. in the evening, and I want to make a video talk about my watch list for tomorrow. For those of you that are new to this to these videos, I have a YouTube channel. Let me minimize this, and I have a Twitter, watchotrade. I work off a full-time job, so throughout the day, if I get time, sometimes I'll post, sometimes I'm more active than others. What I usually like to do is before I leave to work in the morning, if I have time, I'll put like some analysis on what I think some charts will do. So this morning, I talked about a couple of stocks. I talked about AMTX. I mapped out my support and resistance levels for AMTX. To basically go long or short. I talked about CMCM. I talked about I was testing a new strategy, and I said if it held 1242, go long. This stock actually closed up at over $13, so it actually, it actually didn't, it worked out. Let me go pull it up. Yeah, so look, this is where I had the breakout level. Pre-market, it went crazy. It went all the way up to 1385. So my strategy, in terms of what I thought could happen, happened. I mean, pre-market, it freaking got up to 1385. I posted this before that move even happened. Not a lot of shares, but it was moving. And then, it washed all day. But it found its support right a little bit below about that 1242 level. And once it broke above it and pulled back and formed a higher low, you could have took it long, risking off 1242. Even though it's not a lot of shares, I mean, it didn't have a ton of volume, but it's up to 1311 now. So, I had my expectation that this thing was gonna finish up today, and it did. So that made me feel pretty good. I mean, the big thing that I posted on, with the two that I really were focusing on, were Acre. And I think this pushes higher this week. I'm only looking at two levels, 69 or 74. And then, I talked about, I'm always throwing little shots at gurus because I just feel like, people are just giving their money away and they're not really teaching you shit. But basically I said, I'm looking at two levels. If it holds 69 to buy the dip, or buy the breakout holds 774. Right? So let's talk about Acre before we go into tomorrow's. AKER. So you guys know, for those of you that have been following me for a while, right? I tell you the key to buy breakouts is you don't buy the breakout when the breakout happens. You buy the breakout either when it tests that level, or if you see it test that level, or if it forms a higher low past the breakout. So here, let me pull this up here so you can see. All right, so this is what happens, right? Market open, this thing gapped up above it, actually pre-market, pulls back, market opens, right? So here's that 74, and the reason why I had mapped out 74, because 74 was the previous day's high, right? That's it. That's what we're looking to see. We want to see it hold the previous day's high for a continuation up. It's that simple. Look what happens, guys. The stock breaks out, pulls back, and this is the 200-day simple moving average. It bounced off it, and then it starts gapping up. Now, rooms like Warrior Trading, they teach you to buy the breakout, like right when it breaks out. And that's how you lose all your fucking money, because what happens is, if it's a false breakout, it's going to gap up and then just tank, and a lot of people chase. You don't want to do that. Now, what you want to see is, what do I always preach? I say you let the breakout happen, you want to see a retracement, and you want to see it test resistance. So this was resistance up to this point, right? Up to this point yesterday, this was resistance, right? Remember yesterday's high. Oops, let me zoom out, sorry. Right? This was yesterday's high, right? You want to see resistance become support, and that's when you buy. So what happens is it breaks above it, you get the volume push, but it retraces back, and look, it literally touches 74. And this is where the buyers come in. They say, oh, okay, it's holding yesterday's high. So now all the smart buyers go in and drive the price of the stock up. That's when smart buyers buy. That's when you should buy. Now, sometimes it doesn't always go back to the previous breakout level. Sometimes it'll like gap up and then form like a higher low. So let's say if it had pulled back and formed a new higher low here, let's say at 75, then you see it start moving. So you get in, risking at 75, risking the previous day's high. There you go. Now you have a risk strategy. And then what you always want to see is you want to go back in the chart history and see, okay, where's the next resistance level? So you see it has overhead resistance, and right around what it hit a high of 83. And look, right around here, this 83 level, 84 level, it couldn't break it. You see, and it's holding now. It tapped close to 84, didn't quite touch 84, but it had that resistance. That's why you got to see what's the next level above, because it can get rejected and pull down. Now, what I have this on watch for tomorrow, and I didn't put an alert there, but we definitely want to put an alert at 88.5 too. Let me put that there now. Let's put an alert, right? Because we want to see. So 88.5, we want to say buy potential breakout at 88.5, buy if holds, or short rejection or breakdown, whatever you want to say. Because what happens is it could break above it, it could test it, and then if it breaks above it and doesn't hold, it could just completely tank. That's what happened last time. It got up to here, the 88, and then just completely washed. So you gotta be careful about that. But I called it, and then the other one I called was Apple. So Apple wasn't on my watch list. I mean Facebook. I'm sorry, Facebook. But I knew that pre-market. Look at it. It's just already started tanking, and what I did was I went back, right, and I put the 30-minute. I think this was like the 20-day chart, and I mapped out those previous support levels to see, could potentially buy a dip or short, risking each level. So, right. And why did I do that? Because the news that's happening right now about Facebook. I think this news is gonna fuck Facebook up for a while. It's bad, and we'll see what happens. But I put Facebook, the news surrounding the company is bad. My guess is tanks for the next week unless Zuckerberg can filter the narrative. If I were him, I'd be honest, say we fucked up, let the damage happen and move on. Look too short, lower highs risking previous high, right? Remember, I said this all pre-market. So let's pull up Facebook. All right, so here are the here. So this was pre-market, right? This was pre-market. This is where the tanking started, right? And all I did was I looked back further in the chart history, and I said, okay, where are the support levels? So here's some support, right? And over here's some support. So you could have took a short once it broke below these support levels, looking to potentially exit at the next support level below, or stay in if it can't hold each, and especially if it broke this one. And look, this shit tanked. It's still tanking. Just like I said, I have a overnight. I'm swinging this. I didn't cut this. I always close my positions out before the end of the close, but I think Facebook is gonna continue to tank. So if I was, if you are an options trader, you could definitely get some puts. I think this shit is gonna tank bad over this news. It doesn't look good for Facebook. If it breaks this 170, and it's just gonna keep tanking. I wouldn't be surprised. This got back down to 150, 140. I mean, that's how bad I think this is gonna tank. That's just my guess. I mean, obviously nobody knows, but I called Facebook out, and you could have did exactly what I said. So here we go, right? Market opens, pops, right? Can't break this key level here. Goes down right here. You could have shorted, right? When you see it starts tanking, you could have took a short here, risking this, the previous high, lower high. Or you could have took a short here, risking this. Or you could have took a short here, risking this. Or a short here, risking this. Or a short here, risking this. Or a short here, risking that. Just like I said, short, risking the previous high. Because I knew that this thing was just going to keep tanking, And sure enough, you had a dip by here, but then, it got rejected by VWAP. And once it got rejected by VWAP, you could have went short, risk, right off that VWAP gap down. So, I mean, I called it out. Guys, I do this shit every day. You can go through my timeline and look, I talk about X. I expected a wash. I think X actually opened. It actually opened, and I think it popped. It was tanking pre-market. Yeah, you see, so the wash started pre-market. I already had my support and resistance levels mapped, and I mapped them from the previous day, like I always do. And and then the market opened, and then the stock tanked below my clear support level here, gapped up. So in theory, I could have took it long. Once it touched this, retraced, and found the higher low here, I could have took it long, risking off this. But it broke above it. But you see the head and shoulders pattern forming, and then as soon as you see this weakness starting, you see that head and shoulders pattern forming right in here, man. You could have went short. It's an easy short, risking off this, either the higher day or this, or you could. And this thing just completely washed. I was expecting the wash, and look at this shit tanked. You could have shorted in here, or you could have shorted in here, because these are clear support levels from yesterday, and took this down. The reason why I was so confident that this was gonna pull back, Trump ain't gonna build no fucking wall. That's why. The only reason why it moved up because of the stupid tariffs and the war, and it seems like he's exempting everybody. I think he's just trying to change the narrative because he got so much grimy shit going on that people see that he's full of shit. So I expect X to actually tank even further. That's just my guess. All right, so and you see, guys, this was all time stamped. All right, all time stamped here. So on Twitter, and go through my timeline, go see what I do. I do this shit every day. This is the stuff that gurus be bragging about. I do this for nothing. I do this for my phone, looking at stocks, like simple, So and I'm no genius. You can learn all this too. Just watch my videos, ask questions, and I'll help you as much as possible. So with that said, let's talk about tomorrow's watch list. So these are the stocks I got on my watch list. So a lot of people ask, what do I look for? I look for stocks that have huge highest percentage gainers, stocks that gap up, that tend to hold their highs, or they may tank. The first stock I put here is ENRJ. This thing went from, it ripped from 19 to 50 cents, a monster move. Now, what you want to do is, here, let me pull up the big chart. You want to see, okay, what did it do the last time it had this crazy move? So, like, it had a day where it went from 64 cents to 115, and then the next day, it just completely tanked. And it had a couple of moves here, and I'm just looking at the history here. So it has days where it does these big moves, 31 to 41. Nothing crazy. This day it went from 59 to 85, closed at 39. So you look over the year, or you go further back. My expectation is more than likely that it's done. I don't know what caused this to move. Probably some news. Gets non-compliance notice over low. Reverse. It was no. This is on the second. I don't know what caused this to move, but because it had such a crazy move, there's nothing wrong with putting it on the watch list. So what I did was I mapped my key support and resistance levels, and basically right now, it hit a high 50, and there's no coincidence that it retraced back at 50. 50 cents is a psychological resistance barrier because it's a whole number. Traced back all the way down to this 29-cent level, and it's holding it. So maybe shorts are holding for tomorrow. So tomorrow you could potentially see a squeeze at the open, or maybe pre-market. But I would only be looking at this stock really at two levels. If it breaks above 33.5 and holds, I would take it long, risking 29. And then if it, I want to see if it could get back up to 50 cents. If it gets back to 50 cents and can't hold it, you can short it, risking off there. You can find the shares to short, or if it breaks and holds, go long. But I don't know. It'll probably be done. It's probably not going to have another day where it moves like this. But who knows? We'll see. All right. Next up, AKER. AKER. This thing is rocking and rolling. It looks good. It looks primed for continuation up tomorrow. So what I want to see it do is break above 83.48 and hold. So I want to see it break above, pull back and hold, and if it holds, then I'll take it long. Now, if it can't hold that level, I would short, risking off that level. And then you have potential dip buys here at 78 cents and 76 cents. See, you have clear support in these levels. All right, 76.5 to potentially buy dips, or you could take shorts, risking off one of these levels using the next support level or next level of resistance as your stop. okay, or the higher day. It just really depends. You want to see how high is up. If it's up over 50%, 100%, you know, over a couple of days, you know it's going to retrace back and you could take a nice short down. All right, but you got to look at these key support levels below for potential dip buys, all right, or potential shorts to cover. All right, so you know, I'm looking at potentially 78, 76, and 74 cents for potential dip buys if it retraces back at the market open, because I would think tomorrow it's probably gonna wash a little and then it may continue up. We'll see, because it's up so much, but we'll see. Next up is AMTX. AMTX, you know, it was on today is Monday, yeah, so Friday was up to 312 and you know it came back down. It's holding, it hasn't, you know, given back all its gains, so it's holding this 193 area and it's consolidating. That's kind of a bullish sign. So, and the stock is above the 200 and 300 SMA. So that tells me maybe that tomorrow this thing can have another push up. Now, it may get rejected at one of these key resistance levels, but we'll see. So I have everything mapped just in case. You know, it had 2.6 million shares traded today, so we'll see. You know, a lot less than the 43 million shares traded on Friday. So you know, it's starting to show some weakness, but we'll see. So these are the key levels that I have potentially to go long or short. You know, to me, if it got and held above 270, to me that's the safest place to trade, to take the trade, because I think it will test $3 if it breaks above 270. You can get in if it holds 255, but be careful that it doesn't get rejected at that 270 level. If not, you know, you can take shorts risking off those levels. And then you got these key levels below to potentially buy the dip if there's, you know, opportunity. Now, sometimes what happens is, you know, you get no bounce. You know, sometimes that happens. Sometimes you get a lot of bounce. So you just got to be mindful. But I just got these key levels mapped out. I got my alerts set. And, you know, if the volume's there and the action presents itself, I'll take a trade on it. All right. Next up, GERN. GERN, you know, gapped up crazy pre-market. And I'm just looking to see because, you know, it kind of gapped down. It held this 380 level. And it got back up to 450, and now it's consolidating sideways. So I'm just looking at a couple of key levels for tomorrow. I don't particularly love this stock, but, you know, it doesn't hurt to look. I mean, it's up crazy. And it has a gap to fill below, so you would think that it's gonna pull back and sell off, but we'll see. So what I'm looking to see is if it holds, if it hits 450 and holds, I'll take it long, risking off 450. If it can't hold 450, I'll short, risking that level. And then the next level I would look at is that 535 level. If it can break 535 and hold, I'll take it long. Otherwise, I would short it, risking off 535. And then last but not least, the 380 level. If it hits 380 and holds, I'll buy the dip. Otherwise, I would short, risking off that 380 level. So those are the three key levels that I'm looking at, guys. All right. In theory, yes. You can say, well, I see a lot of support here at this $4 level. Could I potentially put a trend line here, this 406 level, which is, yeah, let me just zoom in here so you guys can see it better. So you could say, could I potentially, yeah, it's right around this let me look at the low. Yeah, 405, 406 is like the, you know, there's another support level here. So yeah, in theory, you could put an alert here if you wanted to. But for me, I'm just looking at those three key levels. All right. Next up is HTGM. Now, this is choppy. And normally, I would stay away from this because, you know, look at this. This is like a chop fest. You know, it's hard to day trade a stock like this with this crazy chop and not a ton of volume. But because it's gapping up from 492 to 565 and it's holding its highs, the potential is there that it may be volatile tomorrow. So I have it. I'm looking for a breakout of 565. If it holds, I'll take it long, risking on 565. Next key level is 550. If it holds 550, I can buy the dip. Otherwise, I can short, risking on 550 or, you know, the high of 565. And the next key level for me is 528. If it holds 528, I'll buy the dip. Otherwise, I would short, risk it off that level. All right. So those are the three key levels that I'm looking at for me potentially. But there's other areas. But it's a chop fest. I mean, to me, the safest play if it breaks out and holds 565. To be quite honest with you. Next up is CRON. CRON is another stock that's holding its highs and, you know, has above average, above its average volume. That's why it's on the watch list. I don't know the news. I don't know anything. That's how I kind of pick my plays. So next up, so this stock, it's hit a high of 890. So obviously, if it breaks 890 and holds, I'll take it long, risking off 890. If you can't hold 890, I'll short, risking off 890. The next key level for me is 845 because there's a lot of support here in this 845 level to buy the dip. Otherwise, if it can't hold 845, I'll short it. Now, just be careful. If you short off that 845, there is support here 835, so it could potentially go here and then bounce. But if it can't hold 835, you're gonna get a nice wash, I think, back to $8, maybe even below. But I would look at this 803, $8 level to buy the dip. Otherwise, it's done. So we'll see what happens tomorrow on this stock. And it's hard to borrow with Thinkorswim. It may be easy to borrow with E-Trade. I don't know. Next up is KBR. I've traded this stock several times. So this stock, obviously, it's a chop fest too, but it's been slowly grinding up. And the reason why I put this on my watch list, I'm just looking at one play. If it can break above 1706 and hold, I would take it long, risking off 1706 or $17. That's it. That's why it's on my watch list. There's nothing like too sexy. I found for trades tomorrow. Nothing that I'm actually in love with. Next up is HRTX. Now I like this because from a technical standpoint, this is the the daily. It has a gap to fill below here, $21. It's at this right now. It went from $21 to $32. It had 10 million shares traded today. Now, what I love about this is that I would love it to see break that 26.46 and just wash, and then you could take a short on it and bank maybe 4 or 5 points. Now, these are the type of trades I love that you won't find, and it's easy to borrow. When stocks are not listed there, that means it's usually easy to borrow. So if it breaks 26.46 and can't hold it, take a short on it, and you could probably get, the potential here to get like 4 or 5 points short is huge. Now, if it holds this and goes, if it breaks above, let's say 28.71, you could take it long, risking off 28.71. And the next key level here is 30.30. If you can hold 30.30 to take it long, risking off 30.30, and obviously the high of day 32.70. And if it can't hold each one of these levels, obviously you could take a short, risking the next level above it. All right, or if it shorts here, you risk 32.70. And that's it, guys. It's not rocket science, And these are the type of stocks that nobody puts on their watch list. But I've done, since I've been studying charts for so long, I know that these plays that nobody pays attention to, but they always give it back and they always go back down, and they're great for shorting and making a lot of money and easy, stress-free trades. Last but not least, AHL. AHL is another stock that has, gapped up nicely. This thing was $34 March 2nd, and now it's $44. This thing is on a tear. Aspen, I don't know anything about the company, other than it just had this crazy rip. So be careful because this shit ripped nuts. But my expectation is tomorrow. My guess is that people are gonna take profit. So if it can't hold 43.35, take it short. Just be careful because you have some support here, 42.84, 85. But if it breaks, it can't hold that. This thing can gap down. I had an alert here set at 42.60 from Friday. And I didn't put on the watch list, but the shit ripped. But it hit my alert. I just, it happened so fast. I didn't have a chance to get in. This thing happened way too fast. But that's why I love Thinkorswim alerts, because I don't have to think about tracking stocks. I just set the alerts, put my notes, and you don't know how many plays I make because of that shit. And take advantage. This is free. You don't even have to pay for it. So these are 3 key levels that I'm looking to trade. If it pulls back and holds 43.35 by the dip, or by the dip if it holds 42.84. Matter of fact, I'm gonna put an alert here. It's actually 42.85. Potential dip buy at 42.85 for sure. Breakdown. And guys, you see I trade everything. I don't just trade penny stocks. I trade whatever's popping. Whatever's volatile and easy to trade, I'm in. I don't limit myself to penny stocks. Don't be sold that bullshit by Tim Sykes. He's telling you that, guys. This is their niche. Like they they gotta sell you on something, right? Especially most of you kids are young kids, very impressionable. You don't really have an understanding of things, and they just play to your, your ignorance, But higher price stocks have range, obviously, as you can see right here. So they all have range. Low flow, low price stocks, high price stocks, they all have range. It just really depends. The problem is that people get scared off by higher price stocks because they can't take a lot of shares. But you know what? They're actually a lot less stressed because 100 shares can get you $300, $400, $500 because they move 4 or 5 points, and you're only risking 100 shares. So if it goes against you 1 point, that's only $100 you're losing. But when you trade a stock like, for example, like today, AMTX, or this was Friday, and you're in, let's say you go and you try to buy because you think it was gonna break that 312, and you buy in 2,000 shares, and guess what? The fucking stock just tanks and rips down, and guess what? If it goes down almost a point, you lose $2,000 as opposed to $100 when you had that $100 position in that $40 stock. So penny stocks are a lot more volatile, and you got to be really, really careful when you trade these penny stocks because they could really go against you quick. That's why when you buy, you got to be near a key support level, or when you short, you want to be near a key resistance level to short into. That way you have minimal risk, all right? So I know this video was a little longer than usual, but that's what I have on Watch tomorrow. I'm going to post this on Twitter. Follow me on Twitter. Subscribe to my YouTube channel, watchotrade. I got like over 100 videos there. I mean, just a lot of content. It's all free too, man. I'm not charging nobody for any of this. I'm just doing this because I just like sharing, and I think it's cool. People are actually learning. All right. So with that